Silence your cell phones. I think we do have a quorum, or we will have a quorum when we make the roll call at this point. Madam Secretary, please call the roll.
Representative All.
Here.
Representative Bentley. Representative Bray. Representative Duval.
Here.
Representative Frazier Gordon. Representative Gooch. Representative Justice. Representative Lewis.
Here.
Representative McPherson.
Here.
Representative Rorix.
Present.
Representative Roberts.
Here.
Representative Smith. Here. Representative Stevenson. Vice Chair Lockett.
Here.
Vice Chair Pollock.
Here.
Chairman Meredith.
Yes, ma'am. We do have a quorum duly constituted to do business. As this is our first meeting of the House Banking and Insurance Committee for this session, I do want to recognize the new members on the committee who are here with us. We have 5 new committee members. 3 of those, I think, are new to the General Assembly. Others are previous members but have not been on this committee before. So I want to start by introducing Representative Chad All from Fayette County by way of Daviess County, who is an IT manager. Representative Josh Bray from Mountain Vernon, who is a consultant. Representative Robert Duval from Warren County, who is an optometrist. Representative Jacob Justice from Harlan, who is a dentist. And Pike. Okay, I apologize. Harlan is in your district, correct? And then Representative Rachel Rorix from Jefferson County, who is a contract worker and former legislative aide on Metro Council over there. So we're happy to have our new members with us on the committee. Happy to also have our returning members who I have worked with as a committee member, not a chair previously of this one. But at this time, I would like to call Representative Pollock, my vice chair, to the table with his bill and any of his guests that he may have to testify with him on House Bill 210. When you all get to the table, please introduce yourselves for the record, and then you may proceed with your testimony.
I'm Bob Dethridge with Shepherd Insurance. I'm also chairman.
Please press the button and make sure your green light's on.
Sorry about that. My name is Bob Dethridge. I'm with Shepherd Insurance. I am also chairman of the Kentucky Insurance Guarantee Association.
My name is Scott Webster. I'm the executive director of the Kentucky Insurance Guarantee Association.
Representative Sarge Pollock, District 51. Thank you, Mr. Chairman. Thank you, committee. Today's House Bill 210 basically shares with you all kind of a cleanup bill for the Kentucky Insurance Guarantee Association. There is a subcommittee or a committee sub on this bill, and it basically removes the following language from the definition of covered claim, and that's a consortium claims are not separate claims subject to separate coverage limits. So basically it addresses this in the covered claims. So that's what the committee sub does.
Have a motion on the sub from Representative Bray, second from Representative McPherson. The sub is before us. No, we need to take a voice vote on the sub. All in favor of adopting the sub, say aye. Aye. Any opposed? Sub is now before us. You can do the further explanation of the bill.
Thank you, sir. So basically, what is Kentucky Insurance Guarantee Association? This is a association that was established in the Kentucky General Assembly back in 1972. And so it governs and basically overall a fund that protects insolvent companies that are members of or come into the state of Kentucky. So today we've got, again, Bob Dethridge, the board of president, executive director Scott Webster. They do run a current board, and so members are assessed to provide the funds to cover claims filed by claimants and policy holders of insolvent insurers. That's the purpose of the Guarantee Association. House Bill 210, what does it do? And it updates basically the statutes governing the KIGA for the first time since 1998. So this is actually the first time we've looked at this, updated, kind of the cleanup bill since 1998. It more closely aligns the governing statutes to those in the current National Conference of Insurance Guarantee Funds Model Act, but it does not adopt everything in that Model Act at the national level. So among the key provisions in the bill, self-insurers are barred from recovering from KIGA. It is important to note that the self-insurers are not members of the KIGA and have not paid assessments as members do. So this will assure that KIGA will not basically cover any of the self-insured funds that are out there. Updates of the definition of a covered claim, establish the limits of cyber security claims as well. So basically, in a nutshell, the KIG statutes, and it helps to protect their funds from being subject to claims by those who have not paid into their association. So that's the gist of the bill itself.
I have a motion on House Bill 210 as amended by Committee Substitute 1 by Representative Bray, a second by Representative Lewis. Do I have questions from members of the committee? Representative All.
I just have one question, and we talked about this on the House floor yesterday. Why not just make everybody be a member of the association so you didn't have these outside claims that would not be covered?
Go ahead, Bob.
Okay. Thank you, sir. The reason is there are two types of insurance companies. There are admitted insurance companies that go to the Department of Insurance and are granted a certificate of authority. And those companies look for the better business, the low exposure, the better claim history accounts. There is another group of insurance companies that do business that are non-admitted carriers, and they're not members of the guarantee fund. And what they do is they take the high-risk accounts that the admitted carriers don't want. I would say Lloyd's of London, but Lloyd's is right now an admitted carrier in Kentucky. But kind of your Markel, surplus lines brokers. And whereas I, as an agent, have a direct appointment from the companies I represent, the surplus lines go to a broker who agents like myself would go to purchase the policies for high-risk accounts. So if it's just the way the statutes are written.
Go ahead with follow-up, Representative All.
Thank you, Mr. Chairman. Do other states have the same, I guess, bifurcation of admitted versus not admitted? And
Yes, sir.
okay.
Very common.
Any other questions from members of the committee? Seeing none, Madam Secretary, please call the roll.
Representative All,
Aye.
Representative Bentley, Representative Bray,
Yes, and I need to record a present vote.
Representative Duval, Representative Fraser Gordon, Representative Gooch,
Yes.
Representative Justice, Representative Lewis,
Yes.
Representative Lockett,
Yes.
Representative McPherson,
Yes.
Representative Pollock,
Yes.
Representative Rorix,
Yes.
Representative Roberts,
Yes.
Representative Smith, Representative Stevenson, Chairman Meredith.
Yes, ma'am. House Bill 210, as amended by Committee Substitute 1, does pass with favorable expression. Same should on the House floor. Thank you, gentlemen, for being here and making the presentation.
Thank you, Mr. Chairman, and the committee.
And I do want to notate, for those of you all who are in the room and have seen some of our members leave, we do have a couple of conflicts with other committee meetings. And so some of those members have had to slip out to get to other meetings. They weren't just jetting out of the meeting to miss the presentation coming up next. Next, that was the only bill that we have for consideration today. We are moving on to a presentation about the Kentucky Group Self-Insurance Fund and the solvency and administration of that fund. I think we should probably start Commissioner Clark, Commissioner Wilhoit, if you all could come up, make your presentations to start us off, introduce yourself and your guests for the records, proceed, and then we will hear from the industry and the fund administrators after you all make your presentation.
Hear me okay? Very good. My name is Scott Wilhoit. I am the Commissioner for the Kentucky Department of Workers' Claims.
Good morning, all. My name is Sam Flynn. I'm Chief of Staff and General Counsel for the Education and Labor Cabinet.
Hello, Sharon Clark, Department of Insurance Commissioner.
Thank you all for being here. You may proceed with your testimony.
Good morning. Again, thank you for having us here today. We're here today regarding the request by the Kentucky Individual Self-Insurance Guarantee Fund regarding their request for certain funds from the General Assembly for what they shortfall in the funds covering claims for this matter. I guess as a brief background note, I should tell you what the funds are, how they're created, and how they operate. These funds, three funds, were created by KRS 34906 in 1996. Three funds were created out of that legislation. The Kentucky Individual Self-Insurance Guarantee Fund, the Kentucky Coal Employer Self-Insurance Guarantee Fund, and the Kentucky Group Self-Insurance Guarantee Fund, which we're here today discussing. Two of those funds required posting of security with the Department of Workers' Claims. The Kentucky Individual Self-Insurance Guarantee Fund and the Kentucky Coal Employer Self-Insurance Guarantee Fund. One fund did not, and that is the fund we're here for today, and that's Kentucky Self-Insurance Guarantee Fund. Why that distinction? Because it's going to become evident that the Department of Workers' Claims free for the self-insured guarantee, the group guarantee, and that may become some confusion as to why, which one says full security for the other two, but not for the self-insurance guarantee. Also, too, there's going to be some reference today, and I want to be able to explain this, that as part of also our statute that was enacted in 2006 was the so-called 920 fund. The 920 fund, which references KRS 342.920, hence the name 920 fund, it's kind of creation of a backstop, a safety net for claims that were predated March 1, 1997. It's important to know that date, March 1, 1997. What this fund does, and it's funded through we also receive an appropriation, but it's also funded through sanctions and fines we levy against the company. Keep in mind that the 920 fund can only pay claims from pre-March 1, 1997. Again, that will to come out as I alluded to just a minute. Last year, the General Assembly appropriated money to take care of AIK. You're going to hear about that a lot today. AIK insurance as well as KCP. Of course, AIK being the Associated Insurance Fund and KCP, the Kentucky Coal Producers Fund. We were alerted, just to go in a short background on that, we were alerted that both companies were in financial trouble, have been for some time. In 2022, the General Assembly awarded an appropriation of $23 million to basically take care of these pre-March 1, 1997 claims on behalf of KCP and AIK Insurance. Again, there are still other AIK claims we're going to be talking about, but right now, for that fund last year, that was 97 claims. Those are all wrapped up in a package, so no loss portfolio transferred. Basically, they're taking care of those claims now. So everything regarding AIK insurance pre-1 1997 is taken care of. We're not here discussing those claims at all. With the Kentucky Self-Insurance Guarantee Fund, this is a separate appropriation distinct from that one from last year for those pre-March 1, 1997 claims. The KGS fund, again, important to point out a couple of things in this that are important. They're not necessarily regulated by the DWC the way the other funds are. It's a way the statute's written, it's simply the way that it falls out that way. We have limited regulation at best, and for instance, neither Commissioner Clark nor myself we are considered ex officio board members of the board. In other words, we have no voting power, and we have no ability to tell the self-insurance guarantee what they do. That's an important distinction too on part of this as well. With the self-insured guarantee here today, as they're running a shortfall. By the best estimates according to their numbers, they are going to run out of money in October of this year. October. Will there explain that I can't here today how many, or what they anticipate is those ongoing needs and so forth to fund those things. Where we share common interest with the Kentucky Self-Insurance Guarantee Fund is at the end of the day, injured workers who are receiving medical benefits, we must make sure that those injured workers are taken care of. We must fulfill the solemn promise made to those injured workers that they would receive medical care and treatment. The worry is if they run out of money. If they run out of money come October of 2023. There is no other mechanism. There is not a 920 fund for the post-March 1, 1997 claims. We don't have that safety net. We are not even allowed to, within the statutory framework of the Kentucky Workers' Compensation Act, legal zone. We just don't have a pool. We don't have a fund to pay that. That is why here today that how we get to that, how this committee, how the general, how best to fund that shortfall, that's the question here today that I think they will address and we will also consider address as well. We do think they are seeking appropriations in the assembly. They also have other means by which they may be able to borrow, or to get those funds, to get borrowed money, seek contributions for so-called from past members or assessments as well. I guess that's to the extent that I gave a little